Alright guys, so I'm going to just quickly do a trade breakdown from the Aussie-Dollar trade that I posted yesterday and today that I took. So what I'm going to do is just kind of go top down. As you can see, both of these had little to zero drawdown on either one of them, especially if I scroll back down to the 15 minutes so you can see that a little bit better. This one, my stop loss was actually just below this order block right here before, but as it started moving up, obviously I started, tightening my stop loss so it was less of a risk. But it was a little bit wider in the beginning. So, all in all, about a 7R trade in total on this one from today. And then this one was about 10.05R in total. I did close a little bit early, but I left a little bit running to, grab a little bit more profit on these. I will just mention both of these trades were risk entries, meaning that I did have limit orders set overnight. So I, didn't kind of go for a true confirmation entry to, overall have that true change in the overall trend, because as you can see right here, this was a pretty strong bearish move, especially even this one right here was, it tapped directly into my entry point and then just rocketed away. So, they were risk entries, so it wasn't necessarily something I would normally do, but I was confident in both trades, so I just kind of let it be and let them run as they should. So first and foremost, we'll kind of start from a 4-hour time frame. Overall, you can see, right now, we are building up quite a bit of liquidity above these stops right, or above these highs right here. You can see that right now, this is a pretty strong liquidity area, I would say. Even if, you refine it to this one right here, still a lot of liquidity above this. And we can see, for the past little while, it's been a pretty bearish move overall. But we did correct off of this order block down in here that I can mark out, and started pushing back up to the upside. So once we saw that and we broke this structural high, we can, in turn expect that the markets can be a little bit bullish for the time being up until we can really clear, in my mind, this low right here is the true low that we would need to break in order to, have that bearish trend or the bullish trend change and revert more bearish overall. So, if we look at this trade right here from this perspective, the reason I had this marked out, this is actually a 1-hour order block, but it also lines up with a 4-hour order block. And when we have both of those aligning together, we can be a little bit more confident in that area being a strong point where price is going to react from and, push away after it touches into it. Obviously right now, this is pretty terrible price action in my opinion. We do have kind of these tweezer tops right here that we're getting a lot of less bullish momentum to the upside with some stronger candles. And so, overall we can expect the market's probably going to change a little bit here. And if we do clear this low and this low, since we do have quite a bit of liquidity resting, generally in this area right here. So if we break this low right here, I would expect the market's probably going to convert a little bit bearish for the time being. Obviously right now we're still trading pretty strongly within this range, so we can probably expect it to stay within this range for a little while, but unless we clear these lows right here, then I'm gonna keep buying the market and not really having more of a bearish bias right now. So if we switch back over to the 1-hour chart, what I was looking at is right now, this was our previous high. So when we had this momentum move right here that broke this structural high, we can expect that if price starts trading back down into this 1-hour order block that lines up with the 4-hour order block, overall we can expect that the market's probably going to tap into it and we're going to see quite a bit of momentum away. For this trade the other day, I guess this was yesterday, this one I basically did half entries at both points. So What that means is I had a limit order set here and a limit order set here. Because obviously, as we keep going down the line and dropping down time frames, right now I did want to make sure I had at least one, point of interest right here that if price tapped it and ran away, I was still getting filled and it could, at least grab some profits from it. So in this case, I did have an entry here as well as an entry down on this 15-minute order block. And you can see I did have it just a hair above because of spread. I wanted to make sure that, I would still get tapped in because obviously this did just tap and run away. If we scroll down to the 15-minute time frame, like I mentioned, there is this order block right here. A lot of times I probably wouldn't take this trade based on the fact that right now, like I mentioned on the other time frame, this is a buildup of liquidity right here. But with what I'm seeing, we've already purged that liquidity. What that means is once we've created this kind of double bottom area and we've had these stops resting below it, when we have this wick that breaks that breaks that downside liquidity and starts rocketing away, then I know that these stops were taken out below this, and so price is probably not going to trade back below it and trade below this liquidity level. Obviously, we purged that liquidity with this wick right here and pushed away from it instantly. And so when we have something like that, then I'm a little bit more confident. Obviously, you could look at this as your structural change right here, because this was the area that we did technically break this high. But for me, when I noticed that this true high right here was broken by this momentum move to the upside, then I was more confident in this area down here, being that true area that price is probably going to change from. Obviously, we could have grabbed shorts up here, but that was more or less kind of a risky trade since for me this doesn't really fit my trade plan. And so, like I mentioned, this technically, you could have really gotten a confirmation entry on this area. This one I did have my entry just a tad above this area. Reason being, if we look at this, technically that's a broken resistance level. And so something I'm kind of working into my trade plan is looking at, generic support and resistance and using it as a bias to, more or less fit my trade plan and take trades off of. So, as I have this right here that lines up essentially with this order block area, then I did have my entry just a tad above just in case it did tap and run. Obviously with spread too, I wanted to make sure that even if it did purge down into this area, that I'd still get filled regardless, because I'm okay with having just a tad of drawdown if it does tap and just go. But if we refine down to the 5-minute on yesterday's Aussie-Dollar trade, what we can see is, actually we'll go down even to the 1-minute in this case, so I can show you what I mean by this could have technically been a confirmation entry for my entry point. So if we look at this right here, obviously we're building up quite a bit of liquidity in this area because we did have this pretty strong momentum move. This is a buildup of liquidity right here. What that means is we have stops resting below this because this is technically a trend line. So when we see something like that, we can't expect that price is probably going to break below it, purge that liquidity, and then a lot of retail traders, when they see something like that, they're expecting that it's going to keep going up, and if it breaks, they're going to look for the retest and short. Obviously, technically they could have done that because it did drop a little bit, but in reality, let's say you did take that short position somewhere up in here, that's only 12 pips. So in reality, it's not really anything too great. And you probably would have ended up getting stopped out anyways. But, if we look at this from this standpoint, we'll kind of go back down into this area. What I mean by we could have kind of gotten a confirmation entry in this. Obviously, this wouldn't have been the best confirmation entry, in my opinion, just based on price action here. But what we could look for is once we've tapped into this order block, broken away, we cleared out this structural high right here, But obviously we haven't really, showed that we're making higher highs and higher lows up until this area right here where we've cleared this high side liquidity, which I'll draw right here. So that's your kind of high side liquidity in this point. And this was the move that really broke that. So in reality, what we could have looked for is, something more generalized like this. Obviously, I'm not going to get too in depth on what I mean by, purging liquidity, stops and stuff like that. But with something like this, this could have been your order block, because this essentially was the move that broke this structural high once we started making higher highs. And so you could have had your entry point somewhere down in here and had a little bit wider of a stop somewhere down below this. Obviously, that's quite a bit more of an entry. That's a 6 pip difference versus mine was a 3 pip difference. So, like I said, this obviously as price moves up, you're going to tighten your stop loss. So my stop loss was a little bit wider, but I did, once it actually tapped and broke away, I moved my stop instantly. And so it wasn't really any risk for me. Because, like I said, I was definitely more confident in my long positions on Aussie-Dollar than short positions. Obviously, you could have used that as your confirmation entry, because then we build up this kind of double bottom play and it breaks away from it. Effectively, you could have grabbed 22 pips just on that run, but not something I would have personally done, just because, like I said, I took a risk entry on this one. And even if you scale out to the 15-minute, this is kind of crappy price action in my opinion, if we're looking at it from this standpoint. So, I was okay with taking that risk entry and letting it run and do its thing. Obviously, a lot of times, when you see something like this where it's starting to trade back down, this isn't a bad thing, because this actually happened see what time was this? Pre-London, I believe. Yeah, so this would have been pre-London. This would have been the Asian session range in here. So obviously, when we're kind of bouncing in between that, we know there's likely going to be a very strong momentous move to one side. In my opinion, I was okay with leaving the long position and not really worrying about my stops getting taken out on this trade, based on the fact that I knew that my overall bias was still bullish. Obviously, we kind of cleared this high right here, but we're building up liquidity. And so what I expect is price is going to take down this sell side liquidity and then rocket to the upside, which is exactly what happened. So what I could have done is had an entry, on the top of this doji right here, or this hammer candle, whatever you want to call it. I could have had another entry somewhere in here as well. So when it tapped and ran, I could have gotten even more profit, but I was okay with just leaving my overall position in there. Obviously, it tapped and ran. Like I said, my take profit level was right in here, but I left some of my runners going. Like I said, I'm kind of working more on using these kind of support and resistance levels a little bit more, just because I've noticed they do help quite a bit for, having those take profit levels. Because a lot of times you may not always get that wick mitigation take profit level, or, even your order block, which is this area right here in green, that will get tapped overall. Because obviously you can see, if that was the case and I didn't have if I had my take profit up in here, it would have missed by 1 or 2 pips, and then I would have been taken out instantly. So that's why I've been using this area as more or less kind of an area of interest. On this trade, once again, another risk entry, had limits in this area overnight. Price went down into it, tapped, and then ran with 0 drawdown. 0.06 of a pip drawdown maybe in that case, but that's more or less even just spread in that case. So on this one, see it tapped and ran instantly. I don't tend to really bash retail methods, because if we look at it from this standpoint, you have your classic wedge pattern right here that, you really could have entered another and scaled in on this position and just let it run. So I won't really tend to bash retail methods, and the reason being, we're just following the money. We follow order flow. What that means is we're following where money's stepping into the market, whether that be retail money or institutional money. Obviously, with how we trade, we want it to be institutionalized because that just means that we're going to have more of these strong momentum moves like this and this, where big money steps in the market and we get those, super quick profits off of, institutions stepping into the market and, helping us move our profits up the chain. So on this one, like I mentioned, 15-minute order block, had my entry just a couple pips above just to make sure I got tapped in. Obviously, even if I go down to the 5-minute chart, we're looking at it from this standpoint, really choppy price action. Reason I'm confident is we've cleared all these highs. This would have been your previous high, and we've purged that and gone above. So once price traded back down into our 15-minute order block and just kind of consolidated right here and then pushed up, then obviously, I'm okay with having my stop loss at break even in this case. So then that changes it to a 38-hour trade because I really don't have a stop loss in place at this point. My trade's running risk-free. I'm not stressing about it. In this sense of things, I know a lot of people are going to be confused because this is technically a buildup of liquidity. And so with liquidity, you don't have to look at it from the standpoint of it's going to instantly be purged because that's not always the case. Obviously right now, with price moving back down, we're probably going to take out these lows, in my opinion. We may not right away, but with liquidity, it's just an area of interest in the market, meaning that it's an area we want to watch out for. We want to see that eventually price is going to take out these stop losses down in here and probably break below it to where we can get another sniper entry and let price run either to the upside or the downside. Obviously, if it breaks this low, then we'd want to look for sells because, if we can grab a sell up in this wick mitigation up in here, then, we've cleared out the lows. We're trading lower and lower and lower, and we're going to keep going down. With my take profit level right here, once again, wasn't really expecting price to tap back into this wick mitigation. I was just, more or less looking at it to tap into this same generalized area and take me out before, obviously, it started dropping again. But yeah, and like I said, this is obviously something we're going to be watching out for today and even just for the rest of the week going into next week and whatnot, because right now we do have quite a bit of liquidity built up under these wicks right here, and so this is something we're going to want to watch out for. If this does get purged, obviously, we're going to be looking for another area of interest, maybe something down in here, something down in here. Obviously, I've already marked out this area of interest down in here, and I'll even mark out this current 15-minute order block for you guys and post this in the chat so you can see it. Because, this is something I'm going to be watching out for. If it doesn't happen this week, something I'm going to watch for next week, because this is an area of interest that I want to see price tap back into, because this technically was a break of structure right here where we cleared these highs. We double bottomed right here, created an order block, and this was a pretty strong momentous move to the upside. So obviously this is going to be something I'm going to want to watch because we've got quite a bit of liquidity built up in the market right now, whether it's this buildup of liquidity right here or this one right in here. I'm seeing that we're building up a lot of sell side liquidity that eventually I expect to be taken out. But yeah, that's just kind of something to give you guys a generalized idea of how I trade and why I took both of these Aussie-Dollar trades today. This one was 46 pips. This one was 37. One lot on each trade, $370, $460. So not too shabby. That can replace a day job very easily if you have the willpower to understand what all this means and, learn how to actually trade efficiently. But I'll end the video there, get it uploaded, and if you guys do want to learn this, the link to our new Discord, Refine Trading, that me and Sensational just recently started, will be down in the comment section, as well as there will be a link on my banner. So definitely join. We're going to try to do weekly lessons and, really give you guys the knowledge to understand this market and trade the order flow method or institution, whatever you want to call it. Thanks for watching. We'll catch you guys later.